like business news now, and we begin with Singapore's full-year growth figures for 2013, just released by the Trade and Industry Ministry. The economy grew by 4.1% last year due to strong growth in the manufacturing sector. The figure beat the 3.5% to 4% growth forecast for the year. The NTI has also maintained its economic outlook for 2014 at 2 to 4%. On a year-on-year basis, the economy grew by 5.5% in the fourth quarter, easing slightly from the 5.8% growth in the preceding quarter. On a quarter-on-quarter basis, the economy expanded by 6.1%, significantly higher than the 0.3% growth recorded in Q3. Manufacturing was the star performer in Q4. The sector grew by 7% on a year-on-year basis, extending the 5.3% growth seen in the previous quarter. Growth was supported by improvements in the electronics cluster and continued expansion of the transport engineering cluster. The construction sector grew by 4.8% in Q4, although slower than the 6.6% in Q3. Growth also seen in the wholesale and retail trade sector. It expanded by 7.3% in Q4, extending the 6.3% growth in the previous quarter. The finance and insurance sector grew by a robust 9.7%, following the 10% growth in the previous quarter. To talk more with us about Singapore's economy is Selena Ling, Head of Treasury Research at OCBC Bank. Thanks for joining us this morning, Selena. What's your growth forecast for the economy in the current quarter and full year?
Well, we're looking for manufacturing momentum to sustain in the first half of this year. So for first quarter of 2014, we're actually looking for GDP growth to stay above 5%. We're looking at about 5.6% year on year.
Like I just mentioned, manufacturing found the economy to end last year on a stronger than expected footing. Can the momentum carry into this year, though?
Well, there are two sides to the story. I mean, really, if you look at the first quarter growth for manufacturing last year, it was a very low base. It was negative year-on-year growth. So I think due to the low base last year, you're going to see slightly better manufacturing momentum in the first quarter of this year. But if you look at some of the global and regional PMI numbers, actually what we do see is that manufacturing momentum has softened a little bit from the fourth quarter coming into the first quarter of this year. I think some of that was due to cold weather, in the US, and also some fears about the Fed tapering. And also on the China side, we've seen some easing off in terms of growth momentum. So it looks like it's going to be slightly bumpy, probably in the first quarter of this year. And because of the seasonal effect of Chinese New Year falling in January this year as well, we did get a poorer than expected NODX number for January as well. So I think, the absolute number is still going to be positive for manufacturing, but it may be a little bit softer than what we saw in the fourth quarter of last year.
Okay, now non-oil domestic exports in January fell 3.3% on you. What can we expect for this month?
Well, like I said, I think in the January data set, probably there was a little bit of a seasonal effect due to the Chinese New Year timing. We are not too bearish on export growth prospects for this year. We do think that, NODX, which fell 6% last year, year on year, is likely to clock positive growth this year, but very modestly, okay? So we think that, external demand conditions are picking up, mainly because of the developed economies like the US. But that said, you have a little bit of an offset from a sluggish China. So we think that on the whole, it's a very, very modest recovery. Nothing to shout about.
Sales of private homes by developers in Singapore fell 72% in January compared to a year earlier. Will the property sector be a drag on the economy this year?
Well, I think if you look at the number of macroprudential measures that have been put in place, obviously those have taken effect and helped to cool the market. So both prices and volumes have started softening. I think as far as the business services that's related to property transactions is concerned, I think there will be some effect on that front. But I think if you look at what are the key drivers of Singapore's economic growth this year, really I think it's still going to be the usual suspects. Manufacturing is expected to improve, financial services is expected to do well, and also on the construction side, you may get a little bit of slowdown because of the construction activities cooling in tandem with the property market. But on the whole, we think overall GDP growth should still hold in the 3 to 4% range for this year.
Will the economy be impacted by the US Federal Reserve's ongoing stimulus tapering?
I I think it's quite clear that financial markets are a little bit jittery about the pace of the tapering. I think especially after the recent US economic data showed some signs of softening as well in the US growth momentum and going to the first quarter. I think there's a little bit of concern whether the recovery in the US labor market or the housing market is as robust as what the Fed anticipates it to be. But I think it's quite clear also from the FOMC minutes that we got last night that the Fed is fairly comfortable, adjusting the pace of tapering at about a 10 billion clip per meeting. So I think on the whole, the US economy growth should still continue to hold up. But financial markets, every time they get a set of weaker than expected US data, they're going to be pondering whether, the Fed's going to adjust its pace. And if the Fed doesn't adjust its pace, then how is that going to impact the rest of Asia? Because I think the Fed's tapering, is going to have some effect on yields, bond yields, and also on interest rate outlook from here.
Just one last question for you. China's economic data is showing mixed signals. Is the economy in a slowdown?
I think we see stabilization in China's growth. Basically, you're going to see the headline GDP numbers stay between 7+ kind of percent range for the near term. That said, beyond the headline GDP number, there are some domestic challenges in the Chinese economy. So it's really coming back down to interbank liquidity conditions, shadow banking, and then recently in the news also all these trust problems that's ongoing. So I think there's a lot of policy adjustments that's ongoing amidst their economic restructuring process. So I think we cannot rule out, the possibility of policy steps. And I think the foreign investors are watching the Chinese, policymakers are very, very closely. So, every time if you get some volatility, whether it's in terms of the economic data or in terms of, let's say, the interbank rates, there will be a lot of speculation as to whether the Chinese economy is going to stumble to a hard landing. But our base case scenario basically is for a soft landing scenario. We think growth probably will be quite stable. But on the financial market side, I think there will still be a lot of volatility, mainly because the headline growth numbers are not so great for China, and also because the Fed is pressing on with QE tapering.
All right. Well, thanks very much indeed for that, Selena Ling there of OCBC Bank. And that's it from me for now. Back over to Stephen Yvonne.
Thanks a lot, Patrick. Now, just coming up on our show, we'll be talking to Sir Charles.